In this video, learn how a part-time profitable trader agonizingly blew up his trading account so you never do. Hi, I'm Mike Bellafiore, co-founder of S&B Capital, a proprietary trading firm located in Midtown Manhattan, and I'm also the author of the trading classic One Good Trade and the Playbook. In this video, we share the steps you must take so you never have to suffer the heartbreak of blowing up your trading account.
My name's Scott Elliott. I'm an independent trader, and I had a big hit in a stock called Codex a few weeks back, and Mike reached out to me on Twitter and said he'd be willing to kind of work with me. And
Well, wait a second. We've met before that, right? We met. My memory, correct me if I'm wrong. My memory is that we met at an outdoor bar at Traders for a Cause in Las Vegas. Is that correct?
That's correct. That's when I first met Mike at Traders for a Cause. My first Traders for a Cause event. We talked outside of that bar for a while.
And you are a part-time trader, not a full-time trader.
Correct. I have been trading for about 8 years. 5 years before I was consistently profitable, and I had been planning on going full-time until this happened. But it's this thing called life where you get setbacks. But I wanted to share what happened in this trade because I think there's a lot of valuable lessons to be learned that I can help other traders with, and also help me prevent this type of thing from happening in the future as I continue to grow my account and progress as a trader.
Well, let me ask you just as background. So you do have a full-time job, correct?
Yeah, I'm a full-time engineer, and I work at an Air Force base, not in the military, but for the military. And I've been.
Wait a second. I don't want you to don't give away your employer. I don't want to potentially get yourself in trouble here.
It's just it's a civil service job. So basically you're a government employee working for the military, but not enlisted or in the military.
Okay, good. And how would you describe your trading strategy?
So my trading strategy has evolved. For the first, I want to say 6.5 years, I was always looking at just going long, and I kind of developed a consistent strategy of buying long stocks, looking at the daily charts, looking for breakout levels, and I learned that from some other trading courses that I took, and I was doing fairly well with that. It was a pretty successful strategy. It was consistent, and that's where it made sense to me, and it worked. Starting, I want to say late 2018, I always noticed these stocks that would go parabolic, but I was so uncomfortable shorting that I always seen them, and I'm like, but I just never actually did anything about it until IGC came around. I think it was late 2018, ran from, if I recall, $4 to I think $14, and I decided to take a stab at that one at somewhere in the 14 area. And I think by the end of the day, it had crashed. I think back to $4 or $7 or something. And I was like, wow, I'd made more in that day than I never made. And I was like, okay, I'm kind of hooked on this. This is I want to learn more about this strategy and kind of develop it. So that's when I started learning about other traders who kind of short parabolic setups. Phil Godecker was one that I researched, met him at Traders for a Cause, as well as some other ones, and started watching videos. So I kind of went down this path of learning how to short sell small caps, and not just small caps, but also just anything that was parabolic. I made some money on Tilray when it went to 300, although not as much as I could have, because that was still kind of new. I did do fairly well on Beyond when Beyond went up to, I think, 230. On the backside of that one, I did pretty well. And so that kind of strategy I've been kind of sticking with shorting basically for the past year.
If you want to learn 3 real-world setups that our traders use, including the simple setup that we teach all of our new traders and the setup that turned one of our traders into a 7-figure big money earner, check out the free webinar that we're currently running. Just go ahead and click the link that should be appearing right now at the top right-hand corner of your screen. That's going to open up this free registration page in the new window, so don't worry, you're not going to lose this video. You're going to learn more in a couple of hours from this trading workshop than from years of online education.
Last year, I was doing fairly well. I got hit on NBY. So NBY went up 1,000% in one day. I shorted it and I got hammered pretty good. And the mistakes I made on that one were very similar to what happened with Codex. And so it's a very similar mistakes that I made. And so.
Well, I got to tell you, so Phil's a great guy. And last time I went to Traders for a Cause, just before that, I'd actually broken my nose. And yeah, this is the time where you insert the tough story about maybe playing hockey or going up for a dunk and somebody hitting you a foul. So I broke my nose. The person who broke my nose is, I could describe as tough and gruff. And, you should see this guy. It was my 4-year-old daughter. And I could tell a tale of some really scary adventure. We were telling nighttime stories and she flung her head back and hit me right between the temple and broke my nose. And so I was at Traders for a Cause with my broken nose and talking to Phil's wife, and they have young kids like I do, and we were talking about that and shared how I had just broken my nose. And coincidentally, his wife had the same thing just happened to her by one of her kids. And it turns out that apparently she was saying broken noses, one of the most common things for them is kids whacking into their parents and causing some damage. So that's my tough story about being a dad. But so where do you live now?
I remember you having a broke nose out there too. Now that I think about it, I remember.
It was pretty fun. It was pretty funny looking. So where do you live now?
I live in the Panhandle of Florida, a place called Crestview.
Okay. Again, how's everybody doing out there? Everybody healthy? And seems like Florida.
Yeah, everybody's good. They put us on remote work starting yesterday. Was my first day of, forced to being work at home because the Air Force Base is on Force Protection Charlie, I think. So they make you work at home until this virus stuff blows over.
And do you have a trading setup at home?
Yeah, I do have a computer and a desktop setup that I trade at. I mean, I'm off every other Friday, but most of my trading is done on my cell phone at work because, I can access the markets from my phone and I can monitor stuff. And so, I try to make both of them work. It's difficult. I think the success that I did have was fairly well. I mean, I had made pretty, 6 figures in like 6 months trading from my phone from work. And I was getting to the point where I was like, okay, I can make the leap, full-time trader. I can try to do this. I can try to do this because I've been wanting. We got
to get you one of those YouTube commercials where you talk about how you made 6 figures from your phone. Yeah,
and people were kind of shocked. But I'm like, there's no other way to really do it. I mean, I'm trying to make it work. So it's like, I've been in this kind of phase for a couple of years actually, where I'm like, how do I make, I got all this, I got my engineering degree. I work for the government, make pretty good money, but I want to go to trade. So I've been trying to make it work on my own. And honestly, I think I've got the skills. It's just a couple of things, and we'll discuss them in here, that if I can just fix those holes in my game and don't, basically do anything stupid and always keep myself in check, then I think I have a real good shot at it. So.
Okay, and you have a family?
Yeah, I got 2 kids, a 3-year-old and a 9-year-old. Yep, and a wife.
and you got a full-time job. So you have a full-time job. Why are you trading?
Because I just love trading. I mean, just the whole trying to solve the puzzle. The money's good, but it's also, I don't know how to explain it. It's just something that I just intrigued with. It's just, I enjoy it. I enjoy trying to solve the puzzle, trying to, figure it out. And, as many times, I mean, I think if you're going to be a trader, there's so many, it's very painful at times. And I can see why a lot of people don't kind of stick with it for, more than a couple years maybe or whatever, because there's some painful times you go through. There's also some good times too, when you learn things and you grow and you get better. And every time, any, anytime I've really had a big hit, I've always learned something from that that's helped me out in the future. So I think it's maybe a special calling for certain people. I don't know. It's very, you try to discuss it. I even try to talk about trading with people at my job, and they look at me like I'm an alien or something. Like they don't understand active trading. They just, it's a very unique thing, and only other traders, I think, really. And that by going to Traders for a Cause, and then a few weeks ago, I went down to Naples, uh, met with Anthony Crudelli. Merritt Black was down there from your firm, and some other traders, and we had a good time. So it's, those type of things I think is really good for for traders to go and meet and kind of connect with other traders, because it is such a unique occupation. Not a lot of people that aren't involved in it um, understand it.
Yeah, it's look, a lot of people, particularly now, you're running, you're going to work, you're working for a stable firm, stable company, and unfortunately we're hearing the stories right now, which are terrible to hear, which is people are getting laid off. They were working at a stable company, had a stable paycheck. Company just out of nowhere is not going to be able to make as much money as they could. You get laid off. You thought you had the security, and you don't. And I think lots of people get into trading because it gives them that freedom to be able to be in full control of their finances, their destiny, their time, and particularly during difficult, challenging times like now. I mean, right now, Steve and I, so just to take a step back, our firm is completely remote right now. We're not trading off of our phones, but our firm is completely remote. We're connected to each other via audio chats and regular chats, and we have our risk managers in place. Our trading system is still top notch. We're logging into systems that are certainly very, very fast and agile. But we're all at home, and the world has certainly gotten different real fast. And it's interesting to sort of, because of that, I think about the things that I haven't thought about in a long time that I really like about trading, and the ability to. It's one of the things is that nobody can fire me but me, and
Yeah, and
anyway.
I put everything, when I had my blow up on this trade on Twitter, it's a painful thing, but at the same time, I had so many traders connect and reach out, and I talked to so many of them and who've had similar experiences in the past. And when you go through something like that, it does hurt. I mean, it takes some time to get over that. And I was pretty depressed for a couple of weeks. I was, like, yeah, I'd made a huge blunder and it hurt, but at the same time, I had to get to the point where it's like, okay, you got to learn from what you did, and then you got to just set another goal and get back after it, because sitting there and kind of dwelling in that doesn't really help you. So that's where, I started back trading a couple weeks ago, and I've done pretty well since then. I've made, some pretty consistent gains. and I feel better. It's not like I'm back to where I was, but my mental state is better, and I'm starting to feel more like myself. And that is a big thing. If your mind's not in the right place, or you're not, then it's a big thing, I think, in trading, is having having the right mental state and confidence in your ability, because you start to doubt you even know how to trade. Maybe it was all luck or something, and then you start trading, making, doing some trades, you're like, okay, start build that confidence back up. So,
all right, great. And so short message here is you were winning, you were growing your trading account, and then you ran into this trade, which you're gonna outline for us.
Yeah, and I was having like my best January was fantastic. I mean, I think I even posted some of the gains on Twitter from for the month from TraderView, and I was doing great. I was maybe too confident. So yeah.
Well, let's talk about this trade. I appreciate you spending some time talking to us about this. We hope that this discussion will be a lesson for lots of independent retail traders and prop traders and experienced traders, so that they never go through this. And I think first step is, let's go through the trade, and then I kind of want to talk a little bit more about how you felt after it. And we spent some time on your background, so I think that helps put in context. I'd just like to know how you felt. But let's go through the trade and then talk a little bit about that.
Okay, so we'll start off on the first slide. This is what I considered an overextended short trade, or a parabolic short, which is the primary setup that I like to trade. And the date was 2/26 when this event, or this trade, happened. It was a swing trade, so I had a position on prior to this. Next slide. Okay, so once again, the purpose is to kind of present my trade, my thinking, and the mistakes of this trade to the trading community, so that they can learn and hopefully prevent this from happening to them. I'll talk about why I had the opinion I did on this stock and what I did wrong. So basically, everybody knows right now, because it's all over it's unprecedented, this coronavirus stuff, but it started off in China in January, early February, and these coronavirus stocks started perking up. So it's a sector play, and a lot of the runners have listed here: APT, Lake, NNVC, Codex, and the rest of them. There was, probably 10 of them that all took off, started running, which is different than a typical one-day runner that runs and then fails. So this was a sector-wide movement, which they act different, and they can run longer than the one-day runners. And you'll see this usually about once a year, 2 times maybe, where you get this sector hype. And some of the previous ones, if you remember, there was Ebola a couple years ago. Then there were the big marijuana runners, which is when IGC, which was one of my big short wins. And then you had Bitcoin. So there's a lot of Bitcoin plays that ran up like that. So that's kind of a similar scenario as we have here with these coronavirus. Okay, so looking at the market during this time, the market was really overbought. So obviously, since then, the market has dropped significantly. The fastest drop, 30% drop in history, actually. And so my opinion of the market was like, the market's going to drop. I was short some other stocks, and in my mind, my opinion was that the reason for the market drop was because it's way overbought, but not necessarily because of coronavirus. That's more of an excuse, more of a reason, but it's really not that big of a deal. So I kind of disconnected the two. I thought, if the market drops, these things will probably drop too, and people are just going to blame it on the coronavirus. Well, in hindsight, we know that that's not the case. I mean, shorting the coronavirus's stocks was kind of like shorting the VIX. So it was not. It really was the real reason for the market drop, or it exacerbated the market drop. Okay, so the next slide here is talking about where I thought the coronavirus stocks were. So many of these coronavirus names had already ran. This is a picture of NNVC, and NNVC ran from around $3 to almost $20. And then you can see the backside ended on February 1st, and it just kind of faded off. So as a short seller, I'm looking to get on the backside and short the pops, short the rallies after the major move is ended. So it was my opinion that the coronavirus run was over, the major move, and now we were on kind of the backside of the move. So this was just one of them to show you my thinking. You know, I was looking at the backside. So next slide. So Codex was another coronavirus name, and I started doing research on this stock because it was up, and they were putting out a lot of PRs about their product. They basically, it was a cut and paste from earlier PRs of like a year ago about Zika. And it was, you know, the stock has never really done anything. And they've never really had a real product, never really had any revenue. And so I'm looking at the PRs, and it was, I think they put out like 8 or 10 PRs in a period of a few weeks. To me, from my experience, when you see this type of pump PRs, then there's usually an agenda behind that, which is to do an offering or some other type of dilution. And in this case, that's exactly what happened. They did 2 offerings in a very short period of time. Next slide, we're looking at here. This is just showing on March 7th, 2019, what their PR was. And then on February 24th, 2020 was basically a similar PR. And after those PRs in 2019, they did an offering shortly afterwards. So I'm trying to look at this stock, see what the agenda is, and then play the downside after they do their offering and just, you know, fade it back down. Okay, so next slide, we're looking at, they did their offerings, and this is just showing the date when they did their offerings in this whole period. So they actually did 2 public offerings. The stock was up from a dollar, and it, during this few week period here, it ran all the way to $4. So it was my opinion that it was extended, that the coronavirus wasn't going to be a long-term issue. In hindsight, we now know, yes, it was, right? And that this thing was going to fade back down. So it ran from 1 to 4. To me, that was, you know, pretty extended. And they did 2 offerings, so they diluted twice. And so what happened is I entered a initial position on February 10th in anticipation of an offering. And I got the offering, which is what I expected that. And so I put on some more position, and my average was around 360 total. And once again, I mean, a lot of times these stocks will, once they get done supporting it, whoever the underwriters or manipulators behind the stock, it ends up fading back down. So you can usually hold these things for a little bit, you know.
Hey, Scott, do you just get short based on your thesis, or are you seeing something from the order flow or from the chart that you're adding to your thesis that gets you into the swing position?
As far as like intraday support resistance, I trade a lot on feel. It's not always technicals that I use. So it's not always the technicals that I use. It's sometimes it's feel, like I'll see a level that a stock's at. Maybe it's getting resistance intraday at that level, or it can, you know, a pre-market high, and I'll short against that high. But as far as like the minor movements intraday and stuff, as long as it's kind of working in my favor, I try to stick with it. But I'm not trying to catch every small fluctuation, if that makes sense. So in this case, yeah, so this was my plan, and I was going to just hold it and cover it once it fell back to around 2. So looking at this in hindsight, I didn't really have a clear level to where I was going to take my profits. I didn't have an area to where I was going to get out if I was wrong. You know, it was very one-sided in my thinking, in that, like, I know I'm going to be right on this trade because I've done my research. The stock, you know, I'm going to beat this stock. right? So I didn't have a mentality on most of my trades where it's like, okay, it's just another trade. This one was like, I really wanted to beat this stock, and it really wasn't doing what I wanted to do, so I kept fighting it. And why I was in that mind state, I don't really have a good reason other than, it was just a mess up. But so I was so convinced that this stock was just going to keep fading, and then coronavirus wasn't a thing. Well, obviously, coronavirus was a big thing. Just looking at the market.
Can I ask you a question? I say this respectfully. This is something I ask our guys as well.
Absolutely.
And it's not going to come off respectfully, but I mean it that way. Who are you to decide what the proper price of the stock is? And then the follow-up question, who are you to decide that the stock can't go up much higher before it goes to where you think it should go to?
That's a very valid point. I mean, the fact that I looked at it from a position that this is as high as it's going to go was completely wrong. It was completely one-sided. And I mean, I can strictly remember saying, like, I'm going to beat this stock. It's not going to beat me. And that was absolutely the wrong mentality to have. And it's not the way I normally trade. I try to figure out why I treated this stock differently than other trades, and I don't have a good answer other than just stubbornness.
Yeah.
That's it.
So look, I'll steal something from Shark, and Shark is obviously probably one of our best traders, and lots of people who know who Shark is. And so one of the things that Dr. Steenbarger catches or tends to counsel Shark on is when Shark is over-convicted in an idea. Yes. That's when Shark gets himself in trouble. He gets over-convicted. He knows it. He says it after his reviews when he has big drawdown days. He'll come in and he'll say, I was over-convicted. I really believed the stock was going to go down. I really thought this was overbought. I thought I was right. I thought it was right. I put too much risk on before I started to see the backside of a trade. And so what elite active traders do is when they start to sense that they're over-convicted in ideas, they catch themselves and they say to themselves, well, how would I be wrong? What's the other side of this trade? What are the longs thinking in this trade? Why do they think that they might be right? Today, for example, we were on a chat. We all were leaning short. We gapped down. Everything was holding below VWAP. We were in really good positions. And I said, the flip side to what could happen right here is this could be a squeeze that's coming, because it's just so obvious that we all should be short. And so I liked the trade, but I was saying out loud in the middle of the trade, well, here's how I might be wrong. That's a really good best practice to get yourself into. I've got a good trade. I like the risk reward. I think I'm right, but here's why I might be wrong. And then obviously, here's where I'm going to take my loss if I'm wrong. Something to think about.
Yeah. And I'll also say, like, a lot of times, I will be right, but I'm just a little early, right? And I'm sure that's the same way with Shark, in that his thesis is, it might be a day or two too early, or even a few hours. And if you go too big, too soon, you don't have much margin for error, which is what happened with me. I kind of oversized, didn't have an exit, and I got hurt. So I also think if you take a starter position and only add to the winners, then it's kind of hard to really get hurt like I got hurt in this trade, where if it goes against you, one, you're not so emotionally wrapped up because it's a small position, and two, if it's a small position and it goes against you, you have more wiggle room. It's not enough to really hurt you. So yeah, so that's kind of my thoughts. Let's see, so the market on 226 started breaking down. This is just one of the the small cap or the IWM, And this is when the beginning of this real kind of waterfall sell-off began. And so the next slide is the blow-up trade. So this is on 226. Codex broke out above roughly 425 on really big volume. And that was really the recent high. That was a key level, technical level on the daily chart, and ran all the way up to almost 11 bucks. I actually added to some of my position on this, and I had a total of 16,000 shares from an average of like in the high threes. And then my broker E-Trade forced me out, forced covered in the tens. And my total loss was just a little over $100,000. So, looking at the chart on the daily now, it's really a kind of a clear breakout. It's a buy. If I look at that chart now, in hindsight, yeah, it'd been a perfect breakout trade to go long on, which is, for a long time, those are the trades I made. I traded, long breakouts, but just like this. So that, that's
Was there a spot that you can remember back to where you thought, hey, I should cover?
Yeah, I can remember when it broke through the 425 area, that was like, okay, this thing's gonna go. And I was at work, I was eating lunch, and I can remember being down about 30 grand, and I was like, damn, it kind of sucks. But I'm like, and I just kind of froze, if you, I don't, thinking that I would get out on a pullback, and it never did. It just went all the way up, and then it's like, did I just let that happen? How did this just happen to me? So, and it was tough, I don't think I've been that depressed in ever. I mean, it was 2 weeks. The first few days were pretty tough. I couldn't really sleep. I was just beating myself up. I was just like, just gave away, 6-8 months of profit, whatever it was. And it's painful. I mean, you really don't want to go through that. It's one of the most emotionally tough things. I don't know about losing a close loved one. I've never really had that happen to me. I don't know if it's going to be that extreme, but it's pretty painful to feel like you just kind of wiped out your entire trading account. So,
what was your exit plan when you were in the trade?
Yeah, so I didn't really have one. I was so convinced I was going to be right on this, and that was, like I said, that's one of the biggest mistakes that I made on this trade.
So I'm going to say something to make you feel better about yourself, and I'm going to say something.
No, I want to hear.
I sort of got to say. So yeah, you can't ever be in a trade where you don't exactly know where your stop is going to be. Can't ever be in a trade like that. That is, if you were on our desk and I tap you on the shoulder and ask you where you're going to cover the position, if you're wrong and you can't answer that, you're going to be shut down for a couple of days.
Absolutely.
And so not only that, you need to know exactly where you're going to cover every position, but you need to predetermine how much you're willing to lose under specific trades. You need to have a risk budget for certain swing trades, and it should be a percentage of your overall account. So let's say you had a $100,000 account at that time. You need to decide, hey, I'm going to risk, I really love the trade, I really think I'm right, I'm going to risk 10% of my capital on that particular trade. Most swing traders, it's really between 2 or 5% on most swing trades. But let's just say you really love the idea and you allowed yourself to lose $10,000. You can't lose more than $10,000. You know it. And beforehand, you said that to yourself, and it's by percentages. We do it by percentages because then when your account size is $500,000, well, you just say, all right, I'm going to give this 10% of my account. I can lose $50,000. That means I can short X amount of shares. My stop is 5, and go from there. So that's something I got to sort of say to you. I will say to you bring Shark back in here again, that there was a time when Shark had a huge loss in KBIO.
I remember you talking about that on one of your videos. I remember hearing about that.
Yeah, I mean, I think he lost 400,000. He remembers it as 350,000. We'll go with his number. And it made him a better trader because of how he responded afterwards. He shouldn't have lost that much money. It went against him in the after hours really quickly. A bunch of the people in the firm were in the position. And it was a big hit. It was a lot of money, even for him. And this was 6 years ago, maybe. And so that was a big number for him. But he used it as a way to get better. He used it as a way to improve his risk management, which has enabled him to be a lot better trader. I mean, this month he's up about $3.5 million.
Wow, that's amazing.
And there's several guys at the firm up over $3 million this month, who at one point along their careers have had to be challenged with risk management challenges. So it's really more about, well, we can't do anything about the loss right now, other than when there's a problem, you got to create a solution. And all of the guys who are great traders have all gone through issues and had to overcome them. So you're probably in good company there. That's the good news. And the fact that, so that's been my experience. But we got to take away a solution as to how we don't let this happen again going forward. I don't know if you worked on that.
Yeah, so my next slides are talking about that.
Okay.
Okay, so looking at the trade, what did I do wrong? And so I tried to force this trade instead of just looking at what was happening and trading what was there. All my research, from the company was telling me that it was not a good company, that there was an agenda, and maybe there was, but the fact of the matter was coronavirus was a much bigger deal than I was giving it. And it basically made this stock and many other ones that also, aren't, really fundamentally worth anything, that doesn't matter in times like this. So, I just got stubborn and I held this position too long that really wasn't doing what I wanted it to do. I added to a losing position, and when this thing broke out above 425, I should have never added to that. I should have never averaged the loser. Should only average your winners. You should add to your winners. Oversizing, once again, I'll go back to NBY last year, a similar scenario where I shorted too big and the stock went up like 1,000% in one day, right? So small caps, this one was a pretty similar scenario where you get a micro cap company and they can have really, really big moves. So don't go too big, because if you're wrong, you're going to take a really big hit. Stop loss, I didn't have a clear exit for this stock, and going forward, I need to have an exit plan. Where am I wrong? Where do I get out of this trade? Where is it invalidated? And always have an exit plan before you enter a position. So once again, it's kind of reiterating the solutions there. Always have a stop loss. Figure out what that exit point is before you enter the trade. And then I think it's also important to have a time exit, because if it's not doing what you want to do in a certain amount of time, then you're also wrong, because it's just not doing what you anticipated. So I think if you're right, it should be profitable right from the start. It should start working almost immediately if your timing is right. If it's not,
so let me give you something to think about that I do. When I put a swing trade on, I immediately actually put in my stop loss. So on our platform, we have automatic exits. It'll automatically get you out of the position. And so I enter the swing. I automatically put in my stop loss for if I'm wrong. And that way I never have to think about being in a situation. The computer just does it for me.
So basically a hard stop. It's already
Hard stop. I put it in. I put a swing on and I say, here is where I absolutely would have to be out of this trade. And I enter that order. So if it hits that price, I'm automatically out of the position. And then from there, almost always I'm trading the position. I'm trading out of the position. But I have that set so I never am in a position where I'm letting something go against me, where I get frozen or I make a bad decision or I'm on tilt making a bad decision. I've just set it and go from there.
Yeah, I've heard from a lot of traders that that's the best way to go, that you can't trust yourself to make the right decisions in the moment. So by setting hard stops prevents those scenarios where you freeze. Okay, so next is cut losses when they're small, right? So when it's going against you, don't if you blow up your account, you don't have any, you can't trade anymore, right? So you have to have ammunition to go back and to fight another day. So keep your losses small. Don't let them get big. I also say you should never average down. If you take a starter position, if it's not working, don't add to it. The market's telling you you're wrong, so you got to respect that. And so average your winners, not your losers. I mean, there's times where it'll work, but the one time it doesn't is where you start to, add, then you're oversized into a losing position and you get in trouble. Next is take periodic breaks. I think trading is like a performance sport, so you can be on your A game, most of the time, but the times you're not on your A game is when you can make some mistakes. So it's very exciting to trade all the time. It's there's always opportunity there, no matter what time of the day or what day, there's always some opportunity, but you don't have to catch everything. You got to give yourself time to kind of rejuvenate your mind and clear your mind and reset, because you can drift and you don't see yourself deteriorating emotionally, and you can start to make some mistakes. So I think it's important to take breaks in your trading, either during the day and then even, like a vacation week or whatever after a big win. Next slide, have patience. There's always A+ setups that are going to present themselves, but they don't happen every single day. So if you can have patience to wait for your setup, it'll come. And if you can wait for everything to line up in your favor, then you're going to have a very high probability trade. And those are the best times to really to go bigger and to make your week or your month in those really good trades. Next, it's better to be a little late than too early. One thing that I've learned in my trading that I seem to do is I'll see a trade and I'll put it on just a little bit too early. Maybe it's a day early, maybe it's a few hours early, but I cause myself unnecessary kind of frustration because I think the stock's going to do what I think it's going to do, and eventually, if I'm right, but I end up having to kind of be wrong for a little while instead of just waiting until it confirms. So you may think that a stock's going to do a specific thing, that's overbought, it's going to fall, but wait for the confirmation, wait to the backside. And it's better to be a little bit late than too early, and you avoid the front side frustration. Oversizing, we already talked about that. And then I also think it's important that after you have a big win, to continually pay yourself and take money out of your trading account. That's one of the mistakes I've made, is that, if you take money out and you pay yourself and put that money somewhere safe, then you don't have a chance to lose it. I mean, you don't have a chance to make money with that money, but that's okay. I mean, you're protecting money that you've made. And because I think when we're trading, sometimes it just looks like numbers on the screen. We forget that it's actually real money. So take some of that money out, pay yourself, put it somewhere where you're not going to lose it, and then just keep trading and building more money. But I think it's important to take money out of your trading account periodically and put it somewhere safe. And the last slide I have here is just a couple of really good quotes, I think. I just want to share. So this is from William James. He said, "Be willing to have it so. Acceptance of what has happened is the first step to overcoming the consequences of any misfortune," right? So as much as we want to, not be in a certain situation, for example, this coronavirus stuff, this is what it is. We're here. If you had a bad trade and you lost money, that's accept what happened. And then you can move forward learning from it and growing from it and becoming better. So just accept it and be willing. Don't try to hide from the truth. Okay. And the next one is from Napoleon Hill. It says, "Every adversity, every failure, every heartache carries with it the seed of equal or greater benefit." So anytime you've been through something hard that's been painful, there's always an element of growth there that you can become better the next time and you can grow from it. But you got to look for that. You got to look for what is the benefit here in this scenario. And, in my situation, it's just, hey, risk management, always have an exit. You're not going to win every trade. So always have an exit plan. And, everything else that I shared with you guys as far as solutions to the problem. And so that's all I got, Mike.
Thanks, Scott. And so what is the status of your trading right now?
I started back trading a couple weeks ago, pretty small account. I've made around 15 grand or so just since I started back.
Awesome.
And
that's great.
Yeah. So I'm just doing what I know to do with the same, same process and everything, but I'm taking the risk management into account on every trade and just trying to grow. And but for, like I said, for you mentioned at the beginning of the conference, how did I feel after this happened? And like I said, it was probably one of the most painful things. I mean, I couldn't sleep for a couple nights. I couldn't get my mind off of it. And I just was like in like a depressive state where I couldn't, I've never been one to be depressed. I'm a pretty positive optimist, but I just was like, wow, I just, I just did this to myself. And I was wondering, like, am I ever going to feel normal again? Or just, I just permanently like depressed? But once I started back trading and just having a couple of wins, I started to say, okay, you do know how to trade. You made a mistake. A mistake doesn't make you. You can do this. Just get back a small start and just get back on your horse. Keep going. And so that's where I'm at right now.
That's great. I appreciate you sharing that with us. And I love the way you took a tough situation and were constructive about it and used those feelings of frustration as fuel to come up with a plan so that you trade better going forward, and love the perseverance to get back at it and keep going and figure out how to get another trading account going and make some money. Yeah, I mean, terrific job right here. And very clearly, you're a great role model for the trading community, and really appreciate you taking some time to share that with us. What's your ultimate goal as a trader?
I mean, I want to be a full-time trader. I want to be able to make, you know, as much or more than I'm making as my engineering job as a trader. You know, that's what I want to do. And I've tried to do it on my own. And just to kind of put things in perspective, I mean, I started tracking in TraderView last July. I was averaging about $1,200 a day consistently up until Codex. So I was, you know, I was doing well. Like the statistics were saying, hey, you know, you're consistent, you can make money, you can do good, you can make more than what you're making at your job trading, you know. And so I think I'm there. It's just now I've got to build my account back up to where I've got some cushion and so forth to actually make the leap. I mean, that's still my ultimate goal, is to go and to trade full time. And you know, I'm open to options on how I make that happen, make that a reality for myself. But that's where I'm at right now.
All right, great. Well, work like this, you'll get there.
Now it's your turn. What rules do you follow that protects you from blowing up your trading account? Let us know by leaving a comment below right now.